Hello, traders. Today I was inspired by reading all the posts on how GameStop is being short squeezed and large hedge fund positions are being liquidated or margin calls due to a lot of Redditors buying up GameStop. And along the lines of that, I wanted to apply that kind of logic to crypto. So, what we're going to be looking at today is trades by large whales. So, traders with a fair amount of capital who take large positions on altcoins and seeing how they get short squeezed or long squeezed, if that's even a thing. So basically, what we're looking at today is looking for bad large traders and how to take advantage of them. It's pretty cool. Let's dive in. All right, traders. What you're looking at here is High Block Capital, and what we're gonna be looking at today is if you go to the page that's Tools, you go to Coin Screener, and then you go down to where it says Top Trader Positions, long positions delta. That is where you want to go to. So what this represents is of the top 20% by volume traders on Binance Futures, what percent of contracts are long and what percent of contracts are short. If you have 10 million contracts, let's say, of BTC in the top 20% of traders, 10 million contracts long and let's say 30 million short, then the long percent there would be 25%, because of those total 40 million contracts, 10 million are long. So that would be 25%. Now, what this is screening for is large changes, either increases or decreases in the long position delta. If we see a large decrease, we can assume, something like this, we can assume that a large short is probably entering or a large long is probably exiting. If we see a large increase like this was massive, a 2% increase, that's probably a pretty large long entering or a pretty large short exiting. So why is this important? Well, one of the better strategies I think in crypto that works for me is whale hunting. Whale hunting such that you look for a large trader who is eventually going to have to close their position. And if price starts moving against them, you know they're eventually going to be liquidated or eventually they're going to be forced to close that position. And moreover, what we can also see happen, and I'm going to diagram this out with my hands. If we see, let's say, a large short entry here, and we buy because we don't think that, they were correct in their thesis, and price goes up. Sometimes when price goes back down to that same level where that large short had entered, that large short who was previously unprofitable or underwater might want to liquidate, might want to close their position at break even, which is going to cause this level to be natural support level, which can make it even better for us to, long when that kind of thing happens. So that is really the basis for one of the cooler strategies I'd say that you can do in crypto and you can do with High Block Capital. So without further ado, now that you guys know what I'm talking about, let's look at some examples. First one here, we have at 1635 UTC time, we have Zen USDT perpetual, and we see a decrease in negative 0.8. So the first thing you need to determine is this a large short entering or is this a large long exiting? And there's a pretty simple way to do that. You can do this through Coinalyze or you can do this through Trader. Now what we see here, right here, this is a little bit earlier, but we see a decrease in the top traders, as you can see, right? Positions of top traders, we see a decrease from about a 51%, down to about a 50, so pretty large decrease. And we see open interest increase massively. Well, what does this mean? Well, what this means is that from this period right here where my cursor is to here, we know that a large short has just entered. I'm very confident in that belief because look at this massive open interest increase that's corresponding with this large decrease. I'm pretty sure that there's a large guy trapped here. Now, how do we know when this large guy actually gets out of that position? Well, we're going to know when we see a corresponding decrease in open interest similar to what we saw here. So if we see, let's say, a 9K decrease in a open interest bar, maybe that's that guy exiting. Also, if we suddenly see an increase in 1% of the top traders corresponding to that same decrease in open interest, that could also be an example of where that large short is exiting. Now, why is this important? Well, we know that there's a large guy trapped here, very likely, and because that, we know that eventually he's going to have to buy back. Meaning, if price goes down, he might want to buy back at break even, or even better. If price can begin to go a little bit higher, he can be squeezed in a short squeeze pattern, and we can take advantage of that. Another thing that had happened here is we see a large decrease in the long short, in top traders. And this is quite significant. This is another 1%, but open interest decreases, so I don't really care about this. All this is really telling me is that a large long had probably exited, but this doesn't really matter to me. It's this that you need to look out for. So this is something that I think may fuel a little bit more of a pop, as you can see, because if you look at all of here, this person decided the best time to short was the market bottom, unfortunately for them. Okay. And I'm looking for other examples here. Ooh, look at that. This is way back when, but we can see a large, was this a short? This could have been a short entering. I couldn't really tell, but it looks like that guy got burned too. So let's go look at some other examples too. This is definitely a very, very nice example, but there was another one that I wanted to show you guys as well, and it's on Maker. So Maker USDT, we have a few of them. We have a large short who entered at 1835. So let's go look at that. Because the ratio dropped, okay, I'm gonna get rid of that guy. Because we know that there was a large drop of 0.83%. So let's go look at the point of 1835. Yeah, right here. So I don't really know what's going on here, but to me, this looks pretty simple. Looks like a large long had entered, open interest increase. The top traders goes way up. I mean, there's a large position entering, basically, a very large position entering. And then we see just an open interest decrease with this decreasing. Yeah, this is just kind of plain and simple, guys. This is basically just saying that a large long entered here for some reason, and then that guy exited here. And the amount of money that was in that contract, it's kind of hard to say, but it looks like I can try to ballpark it. Not even like that much, maybe just a few $100,000 even. Yeah, not really like a crazy amount at all. But that's another thing to look out for. And that's why I like this tool so much, that kind of just screens for potential whales that I can take advantage of. Because had I seen that kind of Zen USDT pattern that I showed you guys before, with that large short entering at the market bottom, and then I begin to see price crawl up a bit, that's just such a good buying opportunity for me historically. And it's something that I would definitely want to hop in on. Okay, let's go look at a few more. So it looks like we have another exact same scenario on AVE USDT. Drop of negative 0.88. I haven't seen this one yet, so I wanted to show you guys what this looks like. Let's get the perp, because we have to get the perp. Yeah, here it is. Okay. So the time that this guy or girl or bot or whatever they are, 1905. So 1905 large short. Oh, good short. Look at that. So this is the kind of trade where it's a little bit muddier. But I will say the one thing I do like about this is we have a large open interest increase, right? And we have a decrease in the large traders. So this is indicating to me that what just happened, guys? Well, we have a large short who just entered here. And how do we know when they exit? Well, it's kind of hard to tell again, but when we see a corresponding drop of this open interest and this increases, which may have already happened, because look at this. We have a decrease here of how much? Of 1.685, and what was this increase here on this candle? About 2. Okay, and let's see what this decrease was. About negative 0.873, and if they were to, like, let's say, to slowly exit, yeah. So they could have already exited, but it's you kind of got to be like Sherlock Holmes with this, because this is not a science. This is definitely more of an art. Sometimes there will be very obvious patterns where you see like just tons of super, super large shorts just shorting the bottom for some reason. You see, and if that occurs, basically what you'd see is like a massive drop in this, and you'd see a massive increase in open interest. And then you know that you have a short who is very, very trapped. However, I will say though, there probably is some liquidation potential and, stop loss hitting potential if price does go above 300. So this could be a potential buy, but I still do prefer Zen USDT. Yeah, so this is definitely another way that I've been trading that I really do like a lot more, because you're directly taking advantage of traders that have to exit. Because the thing is, you can try to trade against the smaller guys, but it's complicated. If you want to make money in the market, you need to predict where people are going to buy and where people are going to sell, right? That's how you make money. Now, if we know that, let's say, some guy just buys a bunch of a coin on margin on, let's say, like 10x leverage with $5 million worth of open interest, and the total open interest, let's say, is like only 100 million. Well, we know that guy on 10x leverage probably is going to have to eventually close that long position. What does that make him? A potential seller. We can take advantage of him. You can take advantage of him in so many ways. One of them is just trying to find a sustained downtrend and then trying to short that. Maybe a little bit better of a way would be to see any time that price begins to go back up to where that I'm back down to where back up to where his position might be trapped. You can think about shorting that, and then just watching out to make sure that he doesn't close, because if he does close, then the potential selling is gone, right? Because he already sold. So that is something that I definitely look for. You want to find large potential buyers, large potential sellers, and a great way to do that is to scan whales. There are ways you can do this with on-chain metrics too. You could look at wallet addresses and stuff like that. But for me, this is more important because this is on margin. These guys, you can't hold a margin position forever, no matter what you tell me. Even if you're on 2 times leverage, you cannot hold that position forever. That is suicide. So, all right, FTM USDT has had a lot of action. So what is going on here? Is there anything enlightening? And I do want to go back to Zen to go look at that, but oh Lord, what is happening here? Okay, first of all, I don't know what that scaling, I don't know what happened here. This is just like a weird chart. Just a very, okay, first of all, what is going on here? Look at this. These are patterns I've never seen before in my life. Open interest increasing, meaning that people are entering. Long short position ratios, top traders is just skyrocketing down here. Oh my gosh, look at this. It just goes way down. And then they slowly have to buy back. Looks like, yeah. Yeah, this is just such a clean pattern. You can clearly see that a lot of large shorts had entered here. It's like clear as day. Clear as day, it's large shorts entering. And you can see how they just slowly exit those shorts. And they slowly have to buy back, which probably caused the price to go higher because all of this potential, all of these shorts, large shorts who had entered have to buy back, and naturally the price kind of had to rise because too many people had to buy back. And we're getting a kind of similar pattern here, even though it's kind of like glitchy for some reason. And I don't really know what's going on here. Maybe this is a large short entering, but what this had indicated to me on FTM, where are you? Was it FTM USDT? Where was the FTM? Am I hallucinating, or is FTM? Was it FLM? Okay, they really like one letter off. FLM. Is there no FTM or? Okay, I think I might be going crazy here. So FLM, was it FLM that I was supposed to look at? Interesting. They're very, very, very similar, but let's go look at. I mean, this is a bizarre pattern right here, but I think that was the wrong coin, because it's FLM. That we had seen here. FTM now? Okay, someone's screwing with me. Actually, it was FTM that I was supposed to look at. But this one's very interesting as well. And I can just show you guys these patterns to kind of close the video and tell you guys how to take advantage. So yeah, this to me looks like a pretty clean example of a large long who had entered. So you might say, well, how do we take advantage of this? Well, we know that because such a large long had entered, well, first we want to see how many dollars worth this guy is entering with. About 1.6 mil. So we know that about a $1.6 million long had just entered around here, which means that they are eventually going to have to sell. And look at where they sell. This is just so clear. I mean, besides, there's not much of a drop in open interest, but what we see here is that the ratio drops by the same amount that it basically rose by, which is indicating to me that this guy got shaken out. So what would have been the big brain play to take here? Well, there would have been a lot. There's 2 of them that you could have done. One is a bit speculative and a little bit hard to time, but what if you had shorted here? So you short here, and the only sucky thing is like price goes up 4%. The great news is you get this beauty of a downtrend, if you can survive that. Second thing that you can do is that once price begins to go back to where this large long had entered, this could become potential support. And yeah, but I think that the better play actually might have been the first way, is we see a very large long entering. This guy's eventually going to have to sell. And if you are moderately bearish, I mean, shorting around here would have just been great. And it looks like that shorting around there would have actually even been the market top. This kind of pattern isn't always going to work, but it is something that I've noticed happen time and time and time again. So what I'm going to do to close this video, I'm going to drop the referral link for HiBlock if you guys want to go look at this. Additionally, Coinalyze is completely free. No strings attached. You can go use that whenever you want. But what I want to leave you guys with is just another way of converting markets, less numbers and more people, I'd say. Think about the markets more as just a collection of potential buyers and potential sellers, and your goal is to predict when will people buy, how many people will buy, and when will people sell, and how many people will sell. And if you can start to make those predictions, keep a level head, and employ risk management, that's how you become in the 1% of traders. Because I think that most traders just rely on something like RSI or MACD or some indicators that I don't really love, and they just kind of use those indicators to no end, but they don't really take a look at the market as a collection of positions and potential sellers and potential buyers. And a great example of that is GameStop. I know I'm crypto, but if you go look up the price of GameStop today on January 26th, the price is up 60%. The price is up 60% because probably because of the hedge fund. There was a $3 billion hedge fund position, or it was a $3 billion hedge fund, who is getting burned because a bunch of Wall Street bet traders had just bought up GameStop, causing the short interest to soar because they doubled down and this large hedge fund just kept shorting. And now eventually they're going to have to liquidate their, position, or they're just going to keep doubling down. So it's things like this where you can take advantage of large traders and bring more power back to the retail traders who are typically the ones that get trapped. So TLDR or TLDW of the video is identify the big guns, see if they're smart or stupid. If it seems like they're doing something kind of stupid, like shorting the bottom of a downtrend, then that can provide great rocket fuel for price to rise and can provide good basis for you to enter into a long position. Okay. Without further ado, you guys can check out my courses if you would like on my website, which I'm going to attach below, which talk exactly about this thing, just more in depth and with more strategy involved, of course, too. And with that, happy trading.